Hello everybody, Mike Arnold here, co-founder of Pat Trading Partners along with Bob Iacchino. Super boring day, super low volume day in Tesla. Pretty much a doji. So dojis are when it opens and closes at virtually the same level. Don't expect it to be exactly the same, but you know, it just looks like the plus sign. When it looks like a plus sign, we consider it a doji. We did not get above, I mentioned this trend line, so we gapped above it, came running down to a key area of support, then closing pretty much unchanged as the defining point, and really this 227.50 area is our key level. So above 227.50, we'll start watching for the rally up to about 235. Then we're looking for about 242. Right now, we have the rotation zone coming in at the 220.50 area. We get move below that, which would mean we've kissed the trend line goodbye, and we failed it. Then we'd be watching this very key support, bottom rotation zone coming in at about 215.50. So that's the first level key support. And then below that, we've talked about the 213 area, then the 206 area. So those are all your key support resistance. We're just waiting for it to get out of this range. You see it's been really stuck in a sideways channel. Yeah, we made a higher high. We're making a slightly higher low, but it's just drifting sideways. We've essentially, if you look here, our close is virtually the same as the open back on June 12th. So since June 12th open, we've virtually gone nowhere. People argue, yes, we've made a higher high and higher low. That's fine, but we're sitting back at those key levels. I'm really waiting for it to get out of this range. Remember, long term, still on a weekly basis, because the rotation zone is against us, we're bearish. Short term, as long as we remain above the daily rotation zone, it's got a slight bullish bias. I'll call it more neutral to slightly bullish, since the strong overhead resistance is very key. But that doesn't mean it's not tradable to the long side on a short-term basis. However, as for Tesla, watch if it breaks very key levels again, either to the upside or the downside. It will move very quickly. So if it breaks out of this range to the upside, we'll start seeing again our longer term target. If we break the upside, is about 250. If we break the downside, you know, we're going to go through the resistance areas, but we could easily retest the 177 area. Now we're still June 24th. From a fundamental perspective, at the beginning of July, they'll release the July delivery figure, or the June delivery figures, so that's going to drive the momentum of the stock. Remember, Elon guided to a 90 to 100,000. So we will have to see if that is hit or not. Doesn't matter if it's hit, it will propel the stock. If it's hit, it will probably propel the stock fundamentally higher, because people look at that bullish, but then you have to look at the average selling price, which we won't know until first the quarterly earnings come out, and then B, the filing afterwards to really rip into the details, which is really what it's all about from a Tesla perspective. So right now, it's just trading key breaks above resistance or key breaks below support, and using those to guide on a shorter term basis until the June deliveries are out of the way, and then the earnings are out of the way. So that's what we're looking for with Tesla, and we'll talk to everyone soon. Bye for now.